What's up, guys? So today we're going to talk about the 10 most common reasons why most people get wrecked in the stock market. Over 90% of people lose money in the stock market. The stock market does not have to be complicated. Stocks and stock options are actually very easy if you do it correctly, but most people do this stuff wrong. This is my trading account right here. I have 826,000 bucks in this trading account right here. We've been absolutely crushing it lately, and my 2-year return is $550,000. So I'm not gonna lie, when I started this account right here, a lot of the mistakes that I'm about to show you, I personally made, but once I got these mistakes honed in, it was like clockwork. It was so much easier to invest in the stock market, actually make money, and not be stressed out about a stock or a trade that you're doing, because you probably shouldn't have even bought that stock in the first place, or maybe you paid too much, or maybe that options trade that you just did the wrong trade, you did it way too risky. So in this video, I'm gonna break down the 10 most common reasons why most people get smoked in the stock market. So here we go. All right, so this is my list right here of the 10 reasons why most people get absolutely wrecked in the stock market. We have to go through every single one, and I promise you that if you stay till the end of the video and you see number 2 and number 1, the number 1 reason why most people get smoked in the stock market, if you hang out that long, I promise you that this could potentially save you thousands, if not millions of dollars. If I had one investment video to watch, especially when I was starting out, this would be the video to watch, because there's so many mistakes that you could just prevent off the rip if you just watch this video until the end. So let's start with number 10. So number 10 on the list is not knowing what you don't know. So what does that mean? Let's say you're a brand new investor, you have no clue what you're doing, and you just go on YouTube and you type in how to make money in the stock market. You're gonna have all these clickbaity videos that pop up. One's gonna have a clickbaity thumbnail that says 10x your money overnight. Buy this stock, it's gonna fly high. This is the hot stock. The problem with all that stuff is you're gonna go on that YouTube video, you're gonna feel like you're an informed investor, and then you're gonna go buy into that stock, and maybe you do get lucky. Maybe you do make money in that stock. But what happens if the stock goes down? What are you gonna do? What if it goes up? When are you gonna take profits? So many people have no idea when to cut their losses, when to take profits, and they just feel like, oh, I'm gonna buy into this stock and it's gonna be so easy. I'm just gonna buy in, it's gonna go straight up. Maybe I double my money, maybe I 10x my money, and I sell out. But the funny thing about it is a lot of new investors, maybe they do make money on the first trade, then they get overconfidence in their head, and they go into the next trade, and they go to their wife and they say, hey wife, I just made 10,000 bucks. I'm gonna do the whole life savings on this next trade. Let's put 50,000 bucks into this next trade. They do it, they get smoked, they lose everything. They say, I'm never gonna do the stock market ever again. We're just gonna go buy CDs and we're gonna go buy bonds. And we're gonna go make our steady 4% return or whatever it is. It's way less than what the stock market does in the long run. That is one of the most common mistakes that most people make, is thinking that you know what you have to know, you feel like you understand a stock market, but really you have no clue. When you go look at a share price, if a share price is 10 bucks versus 5 bucks, do you think that the $10 company is actually more expensive because the share price is more expensive? It's not. It's 100% wrong. So knowing what you don't know, that is number 10 on the list. So hopping into number 9. Number 9 kind of rolls off of number 10, where you take too much risk. Can you make 10 extra money overnight? Of course it's possible, but what are you risking to do that? Is that a 1% chance that you're going to 10 extra money overnight? Is that like buying a lottery ticket where, yeah, you could go buy a $2 lottery ticket and make $100 million, but what is the likelihood that you're actually going to make $100 million? Very, very low. And of course, the people that do make $100 million bucks, that's all you're going to see online. They're just going to push the narrative of the person that won. You're not going to see all the stories of the people that lose money in the stock market. That's why right here, I show you guys my portfolio. I show you my wins, I show you my losses, and I win a lot more than I lose. And the wins that I make, I absolutely dominate what the stock market does. Just look up what the S&P 500 did in the last 2 years. It was roughly 25% per year. I did 200%. I totally blew the stock market out of the water. And I actually just released my course teaching you everything that you need to know, how I trade stocks, how I trade options, how to do this the right way, how to scale your portfolio, and how to give you all the knowledge that you need to know around it. That course just released. Check the link below. I have a 30% off coupon code expiring in 1 week from right now. So if you get in before that expires, you get 30% off. So check that out if you're interested. Link below. So number 9 and number 8 kind of stem off each other. You just want to get rich quick. Is it possible? Yes. Is it likely? No. You're probably going to lose all your money. You're probably going to have to start over at zero. Rule number 1 of investing for me is to not lose money. That is Warren Buffett's number 1 rule. His number 1 rule is don't lose money. Rule number 2 is, guess what? Don't forget about rule number 1. Those are literally his number 1 and number 2 investing rules. Don't lose money. Don't forget about rule number 1. Great. And one thing that most people know, but they just don't think about, is if a stock falls from $100 a share to $50 a share, that is a 50% drop. But how much return do you have to get to go back from 50 over to 100? That is a 100% return that you need to go from 50 to 100. From 100 to 50, that's a 50% drop, but you have to double your money from 50 to 100 to make it back. So when you lose money and your portfolio gets smoked and goes down like crazy, you have to understand that when you're getting those returns coming back on the upswing, they're based off of a lower number. 100% return of $50 is $50, but 100% return of $100 is $100. So keep that in mind when you're doing these risky trades. So number 7 is a super important one for me. It's lifestyle creep. I know so many people, literally some of my really close friends, and it drives me insane when they say this stuff. Oh, when I go get that pay raise, I'm gonna go buy that new car. And I'm like, dude, you don't want to do that just because your neighbor pulls in with a brand new car with the nice shiny wheels. They want that car. And I'm like, dude, go through my course. It's going to totally change your life. I will help you do this stuff, but they just don't want to do it. They are stubborn. They would rather live paycheck to paycheck. Anytime that they get a pay raise, they go buy a new car, they buy a bigger house, they go buy that vacation. These are all these things that they really can't afford. They are 2 paychecks away from filing bankruptcy, but they don't get it, and some people just don't care, and that's on them. But the difference between me and them, and hopefully some of you guys watching this video right now, is that we have money. We're going to continue to build our portfolios. Them, they're going to continue to build their car portfolio where the cars go down in value. They're going to go buy that vacation that doesn't produce anything for them. I'm not saying don't go on vacation. I'm just saying grind it out, get some money first, and then have your investments pay for your lifestyle. That is what I teach you in my course. So number 6 is a big one too, and it drives me nuts. It's hiring experts. So I define experts as financial advisors and financial planners. Of course, CPAs are great, attorneys are great, but financial advisors and financial planners, I like to stay away from them. The reason why is because most financial advisors, not all, but I'm willing to bet that over 90% of financial advisors, they do not outperform the S&P 500 in the long run after fees. I personally went into an Edward Jones office and other family practice financial advisors, and I said, look, and of course I walk in there and I play dumb, and I say, look, I got $100,000 that I want to give you to invest for me. I want you to make the biggest return that you can make. I don't care about market volatility. How much are my returns going to be after fees, after it's all said and done? They say, okay, we could do that for you. We're going to put you into our aggressive growth portfolio. And I say, oh, okay, great. Can you show me how that portfolio has done in the last 10 years? They say, sure, no problem. That portfolio in the last 10 years, it did 7% per year, and that is before fees. And their fee is 1% per year. So without even factoring into fees, they did 7% per year, but in the last 10 years, the S&P 500 did over 10% per year. So let's just assume that they charge you no fee, which they charge you a massive fee of 1%, and 1% is really a lot more than 1%. So let's go on a compound interest calculator right here. We're going to show how much a 3% difference matters in the long run. So let's start with $100,000. Like I said, we're going to do a monthly contribution of another $1,000 per month for 30 years, and the interest rate is going to be that spread right there. So they make 7%, I make 10%. Keep in mind, the fee that they charge is not even included. We're going to get to that in a little bit. We're going to go compound this daily, and we're going to see what the numbers are. So right here alone, in 30 years, I would have $829,000 more by investing in the S&P 500. So why on earth would I go pay a financial advisor to underperform the S&P 500? Is it worth it? No, there's no value there whatsoever, and it drives me nuts. I'm leaving $829,000 on the table by going with them, and that does not even factor in their fees. Just to hit on fees super quick, let's say we do $100,000, $12,000 per year, that's $1,000 a month. We do it right here for 30 years, 10% annual return in the S&P 500, a 10% yearly return in the stock market. Let's do an expense ratio of 1%, so the future value of your investment will be $2,900,000. But if they have a 1% expense ratio, they're going to take $756,000 out of the total right here. So the total value is this, and then they're going to take $756,000 in fees. But most ETFs that invest in the S&P 500, the fees are like 0.04. So if you do 0.04, you're getting charged $33,000 in fees. But if you go with your financial advisor, you're paying them $750,000 in fees. So why on earth would I pay them these astronomical fees to underperform the market? I won't do it. It's not worth it. I don't recommend that you do it either. But I will say, going with a financial expert is better than doing nothing. But you could watch a 5-minute YouTube video. I've made plenty of videos on it, how the S&P 500 does 10% per year. If you just go buy into VOO, that's the ticker. It's one of the best ways to get exposure to the stock market in a low-cost way. So a lot of people I talk to, I just say buy into the S&P 500, dollar cost average in, meaning every time you get a paycheck, you just go buy into the stock market and you call it good. The next one is news. I see so many people that send me news articles. Oh, the person that called the next stock market crash is here. He predicted the 2008 financial crash. All of that news is mostly bogus. Of course, a crash will happen. A correction will always happen. There's always going to be something on the future that we can't predict, that we're not going to see coming. And the market will crash. The market will take dips going into the future. But historically speaking, the S&P 500 does roughly 10% per year when you average it out over the long run. So some years it might do 50%. Some years it might go down 40%. But when you average it out, the S&P 500, which is the 500 largest companies in America, it does roughly 10% per year. It's like clockwork. So all those news articles that have been calling for market crashes for years now, if you would have listened to any of them, you would have gotten smoked sitting on cash and just buying your CDs. Because if your CDs are paying you 3% per year, and I'm investing in the stock market making 10% per year, and as I just showed you right here, my 2-year return was 200%. So the way that I do stocks and options, I absolutely dominate the stock market. Link below for the course and I'll teach you how I do that. It's just funny because most of the news articles are just negative news articles. They want to clickbait you in, just like most YouTubers do. And I'm not gonna lie, sometimes I do clickbait you guys in too, but look at the content that you're getting right now for free. This is invaluable content that you're getting right now. You might not think it is, but I promise you, I've been doing this for years. I've been through bull markets. I've been through bear markets. This right here are some of the most common reasons why most people lose money in the stock market. And if you eliminate these 10 things off your list, I promise you it's going to be way easier for you to invest going forward. So most of the time when you read a news article, it's usually negative news. Why? Because humans are attracted to negativity. They don't care about all the good things. They want to see the bad things. They want to see the wars going on, the potential crashes, the recessions, all this bad stuff. And what happens when you go on Yahoo Finance or CNBC's websites? There's ads going all the way down the page. And when you look at those ads, they make money. So don't get sucked into the news. Always do your own research and check your sources. Number 4 is analysis paralysis. Analysis paralysis definitely got me really good when I was starting to do real estate, because real estate, I was so scared that my tenants were going to totally trash the place. I heard crazy stories how the tenants pour that quick set concrete down the drains, they flush the toilets, and then all your plumbing is just concrete. So I was researching real estate for years before I pulled the trigger on the first rental property. Now I'm 30 years old and I have 7 rental properties. If I would have started earlier, maybe I would have 10 or 15 right now, but that's okay. The important thing for me was I finally got started. Whether you watch YouTube videos, whether you read books, whether you do courses, whether you go to seminars, I was always taking in information. I'm always going to be a student of my craft. I will never claim I know everything, and nobody does. You have to continue to educate yourself, because the pain of educating yourself, that is less painful than being stuck at your 9-to-5 job until you die. You need to learn how to do this stuff, how to do stocks and options the right way. The stuff I'm going through right now, this is definitely not everything you need to know. This is less than 1% of what you actually need to know. I'm just going over broad-based why most people lose money in the stock market. Don't forget that coupon code expires in 1 week. It's 30% off. The course is only going to go up in price. So if you want to get in early, I definitely recommend you check it out right now, link below. So number 2, and this affects so many people in the stock market, is they invest emotionally. They do FOMO and they do panic. So number 1 with FOMO, stocks go up in price. They say, oh, I'm gonna buy in. So this right here is a chart of Amazon. So Amazon in 2019 was pumping from 88 bucks a share, and it pumped all the way up to 165 bucks a share, even went a little bit higher, like 183 a share. So what happened? As all the newbie investors were looking at Amazon this whole time period right here, maybe they were too scared to buy in, and then eventually they'll say, screw it, I'm gonna buy in, and they buy in at the top because they're gonna say, dang, Amazon's been pumping for years. I've been looking at it. I've been sitting on my hands, and I feel like now is the time to pull the trigger. So screw it. I'm going to put everything into Amazon stock. Then what happens right here? It goes up, and then bang, it tanks. It goes from 180 a share all the way down to below 100 bucks a share. It went down more than 50%. So as Amazon stock is falling down, they say, crap, I hate the stock market. I'm never doing this again. They panic, and then they sell at the bottom right here. And then look right here. A couple months later, it appears to go straight up, and literally so many investors do this. They are so good at perfectly timing the market in the complete opposite way. If they would just understand that if you buy a quality company on a dip, you would probably do good in the long run. But when there's blood in the streets, when the stock market is falling, most people panic and they sell. It takes a lot of balls to go buy into the stock market when it's dipping. All these negative news articles are coming out saying it's just a start, you're going to catch a falling knife, it's going to keep going down, you're going to get wrecked. That is where educating yourself comes into play. You have to understand how the stock market actually works. You have to know if things are undervalued versus overvalued. You have to be able to capitalize on stuff. And just keep in mind, this entire YouTube channel that I made this channel out of necessity. I made it because I had so many friends that would get smoked trying to invest. So I'm like, screw it, I'm just gonna make YouTube videos. But then more people asked me questions about the YouTube videos. So I said, go to a Discord, shoot me a questionnaire and we'll talk. So then after the Discord, everybody's saying, dude, you just need to make a course. So now I built a course, it just came out, and a lot of people that already went through the course, they said it's totally mind-boggling, the information that I give in there, and they're like, dude, I wish I knew this day one because it would have saved them thousands of dollars. But just do something to educate yourself. Read a book, do a course, go to a seminar. Whether you do my course or not, I don't care. It makes no difference to me because no matter what I do with my course sales, it's never going to touch how much I make in the stock market. I just did that to try to help people. And number one, people trying to time the market. But before you click off the video, let me explain to you why it's not really what you think. So most people say, I have $20,000 in cash right now. I'm going to wait for a dip, buy into the stock market, then at the top I'm going to sell. How many times do you have to time the market when you do it in that scenario right there? It's not one time. You don't got to time the bottom. In their scenario, they got to time the market twice because they're saying I'm going to buy at the bottom and I'm going to sell at the top. So you got to call the bottom and the top. That is extremely hard to do. And then here's what's going to happen because it's like a human flaw. If the stock market falls 10%, they're going to read a negative news article and the article is going to say, oh, another 20% is coming. So they're going to sit on their hands and they're going to wait. But then what happens if the stock market takes that 10% dip and it goes back up? They're going to say, crap, I missed out on my opportunity, so now I'm going to YOLO into the stock market. That happens to so many people. It happens all day long. It's very hard to time the market. So what I do, I don't claim I could time the exact top and the exact bottom, but I can know if the market is grossly overvalued or grossly undervalued. And when you do that, it's very easy to get good entry prices on stocks and ETFs. I've been doing that for years and I've been absolutely crushing the stock market. So these are the 10 most common reasons why people get smoked in the stock market. It sucks that most people lose money. I hate it. I really want to help people. That's why I made this YouTube channel. That's why I made the Discord. That's why I made the course. That's why I post on X. That's why I just started an Instagram account. I want to provide value to you guys and I want to give most of you guys the value for free. That is free on YouTube, free on X, free on Instagram, all that stuff. If you really want to take it to the next level, do my course. I really think it's going to help you out so much, investing a very little bit amount of money in your education, in yourself. I also have a free stock market blueprint. It's like a 5-page document that's going to help you through a couple things. It's very broad-based. It's not very detailed, but that is going to get you started with investing. So if you're interested in that, check it out below. And if you want the course, check it out below. Don't forget about that coupon code that's going to expire soon. And if you made it this far, like, subscribe, and I'll see you guys in the next one.